Jim Rogers is the author, Street Smarts, Adventures, and On the Road and in the Markets. Joining in right now to give us a sense as to the outlook on equities, what his view is as well on the commodity space. Good to have you on board, Jim. Thanks much for taking time out. Just take a look at the market setup, and ever so different from what we've witnessed just about a month ago in terms of the landscape, given the fact that now the fears seem to be with respect to the dollar index rising, as well as what may happen with foreign institutional investors who have now turned around and continue to buy. What's the overall landscape for India looking like for the equity markets?
Well, I think, as I told you last time, there's has been a lot of pessimism around, and usually when there's a lot of pessimism, something comes along to make people optimistic again. That seems to have happened. People think the central banks are going to calm down now. We have optimism, so we're probably going to have a rally for a while. I have not sold short anything. I have not sold anything. I am waiting for this big rally.
Jim, why is the volatility this year in global financial markets so high? Beginning of the year, it was euphoria. Then came the fear. Now there is a comeback. We've seen all emotions perhaps getting played out in less than 8 months. Fear, excitement, greed, euphoria, bubble, realization. Am I missing on anything?
Sounds like Bollywood, doesn't it? That's what India is. No, yes, you're exactly right. But remember, we had 12 years, I'll use the U.S., we had 12 years in the U.S. of a big rally. We've never had such a long bull market in American history. So, of course, everybody got excited. They always get excited at the end of a long bull market. Then things started calming down. We had pessimism, huge pessimism because of inflation and other things. Now it looks like maybe the inflation or the pessimism is breaking, but this will be the last rally, Coach. Just remember, this is probably the last rally.
You referred to it last time. You said, look, a rally was coming. It could be because of technical factors, it could be because of geopolitical factors. I think technical factors and a decline in commodity prices have led to this comeback from the June low of about 10% plus. But when you say this will be the last rally, why are you of the view that this could be the last rally?
Well, because all the signs that we've seen before in this movie, new investors are coming in. They're all saying, oh, I've discovered this new thing called the stock market. It's fun and you can make money and it's easy. And they're bidding up crazy stocks. Crazy stocks are going through the roof. No, all of this has happened before. It's not the first time I've seen this rodeo, and it's happening again. But usually towards the end, stocks go crazy. Remember previous bull markets in the end, they go crazy. Everybody comes piling, and SPACs have been around 300 years. Then SPACs come back. It's all happened before.
Jim, so is it still a lot of silver, some gold, a lot of rice, and a lot of sugar in your backyard?
Well, again, I own commodities, as you know, and commodities certainly are going to do well because of supply constraints that are developing, and the central banks will print more money eventually because that's all they know to do. When we have the recession, they will panic, they will print more money, and when there's a lot of money printing, main thing to own are real assets, whether it's rice or silver, whatever it is, you should own real assets.
Okay, own real assets here. You've, of course, in the past said that silver and agriculture probably the least dangerous in the next 2 to 3 years. But Jim, try and help our viewers understand what we're seeing right now, especially with the US bond markets, the way the dollar is also strengthening. What can this mean for commodities and safe havens like gold and, of course, silver?
Well, whenever you have money printing, it leads to price rises. of real assets. It's pretty simple. It's a historic fact that people can look up, and that's what's happening. Now, you may say, why would you own the US dollar? And I own a lot of US dollars, as I think you know, because when things get turmoil, when we have turmoil, people look for a safe haven. They think the US dollar is a safe haven for historic reasons. It's not. It's not. But I own a lot of it because during the turmoil, people will reach for the US dollar. It'll get overpriced, and I hope I'm smart enough to sell it.
Okay, US dollar is not a safe haven. You're reiterating that. What about gold, Jim? What's the view here?
Well, I own gold. I mean, how could I not own gold? I've owned gold for many years. My plan is for my children to own my gold someday. I hope I don't ever have to sell my gold. But if gold turns into a bubble, of course I'll have to sell it someday. But I should ask you about gold. I mean, India knows more about gold and silver than any country in the world. But I own both and don't plan to sell either unless they turn into a bubble.
Fair enough. I know you own gold. I know you continue to remain very bullish. I want to ask you about other asset classes that you want to pass on to your children. But before that, you've been fairly categorical about your view regarding crypto. And, that's something that you don't believe in at all. If you could just reiterate that theory.
Well, my view on cryptos, you say I don't believe in it. It's not a question of belief. My analysis is that if they become successful as money, governments will react. Governments do not want to lose their monopoly, and governments will do something. The American government and every government is working on crypto money, but when money is on the computer, the American government is not going to say, okay, this is your money now, but if you want to use that money, you can. That's not the way governments think. That's not the way bureaucrats think. They want control, and they want to know everything.
Jim Rogers, you've been in the markets for about more than 27 years, 3 bear markets. You said this has been the worst bear market perhaps in your lifetime. Now, having said that, you've also blamed the US Fed for a lot of what we're seeing in the markets, right? I am going to now ask you about the Jackson Hole Symposium later this week. A lot of chatter. What is the US Fed going to do? Can it finally be ahead of the curve? Can it finally stop overreacting? What are your expectations?
Well, if it's the worst bear market in my lifetime, it's going to be the worst in your lifetime too, I assure you. I've seen plenty of bear markets, but there was a big bear market in 2008 because of too much debt. Well, since then, the debt has skyrocketed everywhere. So next bear market has to be the worst in my lifetime. I mean, I think I'm stating a simple fact, because gigantic debt is built up around the world. I mean, even China has debt now. China didn't have much debt last time. So debt is huge. We have to have the worst bear market in my lifetime. I'm just trying to tell people to do a little research. I don't want to scare people, but they need to understand what's going on.
What are some of the other assets then that you'd like to pass on to your children apart from gold, which you said that you own?
I'll pass on gold and silver. If I were passing on anything today, it would be silver. Silver's much cheaper. Silver's down something like 70 or 80% from its all-time high. Gold is 15% below its all-time high. I will buy both at the right price, but at the moment I would prefer silver to gold. I mean, go around India. You'll see a lot of silver in India. You'll see a lot of gold in India.
For next 3 years, and that's a reasonable time frame, if you, let's say, had to long just one commodity or one currency, what would be that 3-year long trade for you, and what would be that 3-year short trade for you? Imagine Jim Roger comes to India, and before he comes to India on a 3-year long holiday, he is allowed to do 2 things: long one trade, short one trade, and forget about those trades for 3 years. Which would be those trades?
I would love to come to India for a 3. You know, I've told many people it's the single best country in the world to visit. If you can only visit one country, it should be India. So I'd love to come for 3 years. Oh my gosh, the food, the sights, the man-made sights, the natural sights, the women, as you know, they win the beauty contest all the time. Oh my gosh, wouldn't that be wonderful? The one thing I guess I would buy would be silver or silver, maybe agriculture. The one thing I would sell would be the American stock market, the FANGs, you know, the technology stocks in America.
Jim, how will China change the matrix this decade? China was the big demand factor, the driving factor for global economy for last couple of years, I would say for last 1.5 decade. Nobody knows what and how that economy will unfold. It's a large economy. So the direction in which China would move or the way economy would unfold, it will have an impact on supply chain, consumption, metal prices, global geopolitics, policy making, everything.
What do you mean nobody knows? E.T. knows. E.T. knows everything. That's why I watch E.T. Well, China had a huge bubble in property. That bubble is finally popping, and it's affecting the entire economy in China. But and China will probably continue to have problems for a while. But I would remind you that in the 20th century, America had many problems, including many recessions and depressions on the way to being a great success. China will have problems, but they will come out of it okay, if you ask me.
What about the property markets? What about real estate? The view on Indian real estate?
Well, again, you should watch E.T. They will tell you. As you know, at least what I read, there has been a bubble in some Indian property. And whenever there's a bubble, it always pops eventually. Either interest rates go higher or prices just get too high. There are various property bubbles around the world, Korea, New Zealand, many places, but all property bubbles eventually pop. And when you see a bubble, if you're smart, maybe you can play it, but you better be very good because all bubbles pop, even in India. Even in India property, bubbles pop eventually.
Okay, Jim Rogers, great to have you on the show. As always, sticking to his views when it comes to silver in particular, gold, doesn't want to see US dollar as a safe haven, even though that is certainly the case at the moment. Great as always to talk commodities with him.
Well, if I get to India, we'll go buy some silver, okay?
We look forward to that.
Watch some Bollywood as well.
And watch some Bollywood. That was his opening comment, right? India and Bollywood.
Thank you. Thank you.